And there we are. Welcome. Thank you so much for sticking around to the last, second to third to last session of the day. I have good news and I have bad news. The good news is that I have a reputation for very active, dynamic and engaging panels. The bad news to you guys is I have a reputation for very active, engaging and dynamic panels, so I'm expecting a lot and I'm going to push us on that. I'm Dr. Sarah Ivory. Welcome to the GEFI conference. It's one of my favourite events of the year. No doubt will become similar for people who are new to it. We will be a question time panel, which means after the initial comments we're getting from our wonderful panel, I'm going to come to questions. However, while I'm very friendly, I'm a bit of a tyrant about questions as well, because questions start with a word which is either who, when, what, where, or why. At a push, I'm going to go with to what extent, or in your opinion, but they don't start with 12 minutes of comment. So I want to get through lots of questions today, so you have to start with who, what, when, where, or why. Secondly, can I have anyone who's got 10 years or less of professional experience in the room raise your hand? I'm coming to you guys for questions, okay? I want the younger voice in the room. Thank you very much. We need your questions. We do not want to hear only from people with 20, 30 years of experience. So when you raised your hand, you practiced, okay? And that means that when Angus starts coming out with a microphone, I'm coming to you. And if you're nervous about that, start writing them now. Start writing them now. Remember, who, what, when, where, or why. We have our panel. You have read what their positions are. You can read it in greater detail in the agenda. Bruno, Sonya, Brian, welcome. I feel like this is a bit of an us and them, though. I don't know if we're against them, Brian. I don't know. But hopefully we'll see we're all on the same side of knowledge. Thank you. That's a university lecturer speaking there. Couple of panel assumptions as well. We know there is no definition of nature. We're not going to discuss that there's no perfect definition of nature. We know that measurement is nascent and is challenging, and there may never be a perfect measure of nature, by which we mean there can never be a perfect measure of nature. We're not going to talk about that other than where it relates to the questions we're going to ask. And also, the panel are going to accept that there's a huge possibility for finance to invest in or support nature, but there are challenges, and I want to get to those challenges and those opportunities instead of staying at that top level of what do we mean. That said, the first question goes to Brian, who is known for his outspoken views. Brian, there you go. What do we mean by nature finance? What opportunities and risks does it have for organisations, and how should we think about it?
Okay.
It'll be on, yep.
I'm on, yep. Okay, thank you. Well, yeah, what do we mean by it and how do we use it? I think within financial services, I think when we're looking at nature and biodiversity, it just feels like one of those in a long list of things that we should be looking at. And that's possibly not the right approach to take. Having just gone through climate, we're now on to nature, and as we saw earlier on, we'll be on to social at some point as well. But I think from our perspective, it's a risk and an opportunity, like all things investment. Usual rules apply, and I guess where we're at the moment is just getting that education across, just how important it actually is and how it links to all the other things we've been working so diligently on up until now, on climate, for example.
Can I suggest you don't sound very excited about this?
Well, I am excited. I'm bubbling away with excitement. I'm just giving you the industry view. But I think the main positive, of course, is the opportunities that it brings. Sure, there's some risks that we have to manage our way around. But if you think about it, our firm at Mercer, we think it's going to be one of the preeminent themes that are going to appear over the next 2 or 3 years from an investment perspective. So there's bags of opportunity. Clearly there are risks, and that companies and financial service companies that don't do things in biodiversity or nature are going to get caught up in the hoop that takes you back to climate, and you'll be found out. So there's some reputational challenges. But I think the way nature can help with net zero is a really positive thing. That's a good thing. We can double up and get double the hits. And yeah, I think just the opportunity that it's likely to bring us is something that we need to focus on pretty heavily.
So I'm going to ask a question that I don't want you to answer yet, but opportunity for what? Opportunity for finance or opportunity for nature? And how are finance industry actually talking about that? But we're going to come to that in a moment.
That's fine.
Note down that as a question if someone wants to ask it. I'm actually going to jump to Sonya next. I know you're going to be you, Bruno. You're going to have to wait. I'm sorry. But Sonya is from Federated Hermes, and you actually have a long history of stewardship and actually of engaging with nature and biodiversity. So as someone who has been thinking about this and doing this for a long time, can you talk about why and what you've been doing?
Thanks, Sarah, and hello, everyone. Great to be here with you. We do have a long history of stewardship and engagement at Federated Hermes. And, I'll say that biodiversity isn't as new as we all think it is. It's not something that's just cropped up on the agenda. We have been looking at issues like deforestation, like water, like plastics and the circular economy for a while. It's just that it's sort of suddenly being formalized and brought into this new lens. For us, we went through that process in 2020. We did lots of thinking, lots of research about how to structure this approach to biodiversity. And we published a white paper called Our Commitment to Nature, in which we set out the different things we need to be looking at. And I'll say that it's not rocket science. We thought about a business needs to think about how it interacts with nature. Where are the main impacts likely to be, and where are the dependencies? That's, again, like we've been hearing today, just business sense. You need to think about the inputs that you're getting from nature and some of those impacts that you're having. So that's the area that the TNFD has helped to formalize and bring to the forefront. The next bit is use that assessment to develop a strategy that's focused on the most material areas. That might be about agriculture. That might be about a particular commodity that you're looking at, or a particular region that you're sourcing from. Focus on materiality and where the business is really having that impact on nature. Then set meaningful targets in those key areas. And then governance. I mean, we say that governance, board effectiveness are absolutely key to everything, including this issue. If you get the right people on the board that can take a long-term view and really understand these topics, you're much more likely to manage all of the other social and environmental risks. So don't forget the governance, ensure that there's appropriate board oversight, and also policy alignment. In the same way that we've had for climate change, the sort of lobbying misalignment between net zero commitments and then what's actually going on in industry lobbies, it's going to be the same for nature. So make sure that there is that alignment. And then finally, disclosure. So all concepts that we're all very familiar with, absolutely not rocket science, just a way to formalize that. And then since then, we've really been engaging with companies on these topics, starting with the food and beverage sector, which is a clear case when it comes to biodiversity. Really high impacts on things like land use, pollution, climate change. It's 30% of global emissions come from the food system, and it's often ignored in that discussion. And then also really high on the dependency side. Soil quality, pollination, all of these things. The food system wouldn't exist without them. So again, a really strong business case for action. And now several years in, we're sort of starting to see what's happening with those engagements on topics like deforestation, regenerative agriculture, and others.
We might come back and get some examples on that in a minute, but I wanted to come to Bruno. Phoenix Group, very long-term asset owner, really focused on that kind of long-term time frame. How do you approach nature financing?
So just very quickly for a bit of context, because some of you might not have heard of Phoenix Group, we are the UK's longest long-term savings and retirement business, and we've got 12 million customers, and so for those customers, taking that long view clearly is imperative. We're also purpose-led, and so our sustainability strategy is fully embedded in our overall group strategy, and we conduct periodic reviews to identify the biggest priorities, and nature consistently appears at the very top of that list. So it's a really, really big priority for us. As you've already heard from both of the other panelists, that manifests itself both as managing risks for our customers and realising opportunities for our customers. And taking that long-term view is super important in both, and we've got this great position as a long-term asset owner to be able to do that. Starting with risks, there are some big numbers that I'm sure many of you have seen in lots of different publications. $44 trillion of GDP, either moderately or severely at risk from nature, is one that's bandied about a lot. And these are long-term risks, these are systemic risks. They're both transition risks and they're both physical risks. And so we need to manage those risks on that basis. And it's highly, highly complex. And as Sonya was just saying, TNFD has been a great way for us to start engaging with that process. We took part in the TNFD pilot. We learned a lot from that. And it's fair to say we're on a journey, and data is a major issue at the moment. And so the next step for us is to build on the gaps that we've identified so that we're in a position to deploy long-term strategies in the way that we're already doing for climate change. And as we've also heard from many speakers, that climate change nature nexus is really strengthening. But the sorts of strategies that we're deploying for climate change, and we will be deploying for nature in due course, I'm sure, will include things like applying customized benchmarks to our listed equities and credit assets, so that we can steadily tilt away from assets which don't have a credible pathway, in this case, to nature positive, and towards those that do. And stewardship as well, which Sonya's just talked about. So we see engagement as being our number one priority, because by retaining that seat at the table and engaging constructively with our investee companies, we think that's the best way to drive real economy long-term change. And then just very quickly on the opportunity side, we've got an aspiration to deploy £40 billion in productive and sustainable assets. Now that encompasses a whole range of things. Climate solutions is a big focus. Nature solutions will become a big focus. The market is more nascent at the moment, but whether that's investments in sustainable commodities like regenerative agriculture, or whether that's investment in ecosystem services such as carbon credit schemes, there are heaps of opportunities out there that lend themselves really well to Phoenix Group as a long-term asset owner, because many of these projects take a long time. They have a long gestation period in order to deliver value. So we're working hard to understand what those opportunities look like, and we'll hopefully move into that space relatively soon.
Thank you so much. Well, we're going to go to the audience because I want to get as many questions as possible. So, yes, good. Look at those hands up already. Please raise. Anyone who thinks they've got a question, raise your hand now so I know where to look. We've got one here already, Angus, but then we've got one up there. Good, good, good. Excellent. Okay, everyone I'm pointed to, we're going to come to you. Thanks, Angus. Thanks. Here first, and then we'll go right next to you, Angus, after that, in the beautiful, colourful dress. Yes.
Hi, Anthony Gutzer from Coots & Co, and I've just scraped in on your 10-year question.
Good.
So my question is who, how and when. We've got a lot of clients that are very interested in biodiversity net gain. We know that in November, any commercial development will need to improve it by 10% in terms of B&G. We need to understand who can help us understand B&G market, how are you going to do that, and when are you going to do that by?
That's an excellent question. Did you see that? Straight to the question. Who can help them understand it, how and when? Sonya, you look enthusiastic.
I can start by saying that my colleague Andy is in the audience, who works on our private market solution, which helps to address that particular question. He'll be on a panel tomorrow talking about direct nature investments, but I'm sure he can help.
Brian, what are your thoughts? Because I think what we're getting to the hub of the issue here is a lot of people don't know what they need to know. Yeah,
absolutely. And I think if I go back to how we went through the climate debate, the early stages of that, there's almost like a natural sort of route map we followed. We didn't know that at the time, but it kind of evolved that way. And we go through this process of, thinking about policies based on beliefs. We think about how you then would maybe, integrate your thinking through policies and procedures, ultimately to investment thesis, and then, feedback mechanisms and reporting. And I suspect what will happen here is it will follow exactly the same pattern. So before we get into here are the solutions, and there's a lot of chat about what should we invest in, we're going to have to maybe step back a little bit and say, well, what matters to you as an investor? What's the most important things you need that are going to push your buttons here? And can we document that, get it written down, and make sure that everybody buys in? So we do things like belief-based sessions with investors so that they can come to a conclusion about what matters to them. And from then, you've got the bedrock to take you on to the next step. So, the question is, how do we do that? When do we do that? There's an order to things is what I'm trying to get to here. And the how you do it is you follow that pattern. When you do it is more to do with where, I would say, where do you start, actually, rather than when. And from there, you can then ultimately lead to the kind of solutions that are probably going to mean the most to you, because it's a big, wide field, and you need to pick the things that really are. And sorry, we could give you a list of things that you could invest in potentially. There are some that will have bigger bangs for their bucks in terms of impact. We know that by 2100, that agriculture could be 44% impacted through drought as a consequence of biodiversity loss, and therefore there are going to be some sectors and some themes that will dominate your thinking. And so we can drag you to the right areas, but you have to have that upfront conversation about what you think is most important.
Can I just a little comment here? When GEFI asked me to moderate this panel, I said, but I don't know enough about nature. I don't think there's almost anyone who knows enough about this area, okay? So we're all starting somewhere, and really encourage people to ask questions, especially when they don't know. Often in finance and investment, we wait until we know the answers before we're willing to speak up, and we need to speak up earlier than that. Question here.
Hi everyone, Noor Jadala from NatWest. It was just a question around the food and beverage sector that Sonya mentioned. So how can we incentivise people from lower income backgrounds to make more sustainable purchases? Because often those have quite a large markup in comparison to more packaged goods as well.
Sonya, you seem to be enthusiastic again. Bruno's sitting back knowing he's not going to get asked.
Always enthusiastic when it comes to transforming the food sector, which I think is often the one where there are so many social and environmental issues that come together. And yet, of course, we know that we've got to feed a growing population. So we're not going to stop the food system. This often actually comes up when we're talking about sustainable proteins and product innovation. We'll be speaking to retailers and to consumer goods companies about how they can innovate more in this space. But then often some of those sustainable products are either more expensive, so potentially less accessible, or not as healthy. So we actually have to talk quite a lot about potential trade-offs as well. How can they design and deliver products that are both healthy and sustainable and accessible? And I think they're all really critical challenges, because the situation that we have at the moment, whatever your views on meat consumption are, 75% of overall agricultural land is used either for animal grazing or for growing crops directly for animal feed. That's not an efficient system that we've got at the moment. So we do have to transform that somehow, and we've got to do it in a way that's accessible. So I think actually to questions about investment and what should we invest in, at the moment for biodiversity, it's not as straightforward. We don't have the EV equivalent or the renewable energy equivalent that we know we've got to invest in, but that's what we've got to be looking for. What are those sort of innovations that can help us address biodiversity?
Brian?
Yeah, I'm sitting on the edge of my seat I'm trying to look keen here, so you'll pick me. It's such a good question. It's really nuanced in many ways, because if you think about it, there are many people who will go to the supermarket and they will they'll buy based on beliefs. So they'll go organic, they'll buy fair trade, they'll think of animal welfare, all that kind of stuff. And they're quite selective about how they do it. And yet, on an investment perspective, people don't. They just don't pick. We have hundreds of examples of that, particularly in pension funds where 99% of people go into the default. So, but there's a group of people that are not following that. So that's truism for those who can afford to have views. And so if you can afford to have your views, you can go selective and pick things. If you can't afford to have views, there has to be a default arrangement somewhere in the system to deal with people to make sure they get the right nutrients and the right ingredients into their food. And so it's a hard question to answer because I think who does that? So I don't have the answers to this, right? I'm just throwing it out there, but I'm just saying who does that? So you feel that there's an onus on, presumably the government at some point to try and, create that kind of default good quality but low cost, because you can't select it, and I think that's your point.
Question up the back, I think. There was Angus. Did you see someone raising hands? I saw two, I think. There we go. Bruno,
Hi,
I'm hoping to come to you here, so hopefully it's relevant to your expertise.
Hi, Nikki King from the UN Principles for Responsible Investment. I'm curious about what your opinions are for the need for double materiality to better grasp the risks and opportunities associated with nature.
Good. That's for you, Bruno.
It is a good question, and the process we follow to prioritise our sustainability strategy focus areas is double materiality. So we're very familiar with it, and we've in fact just conducted a refresh over the last month on a full-scale review that we conducted last year. And nature comes out, as I said, as one of the top priorities in that review. The reviews are only as good as the inputs to the process, and those inputs are both qualitative and quantitative. I think as we've talked a lot about data being imperfect, but that not being an excuse for not taking action, and therefore I think the approach that we're taking at the moment is the right one, which is probably more focused on the qualitative inputs than the quantitative ones. And I think we've got to the right, sort of on a gut feel level, feels like the right outcome, which is that we've prioritised nature and we're moving forward on that basis. As we build on the TNFD pilot, and as we actually start to make nature-related financial disclosures, and then build out that data set, start scenario modelling, and everything else that we're already several years down the line on with climate change, then I think we'll be able to have an even more robust quantitative view on the double materiality impact of nature.
I think there's another question up in that corner. Oh, the hand has gone down. Oh, there we go. Great.
Hello, it's Harwich, and I'm UC at the University of Edinburgh and Parliament as well, Scottish Parliament. I think there's been a lot of themes thrown around today, and kind of what I'm thinking about is how there's lots of different ideas and processes of how you can go about targeting and achieving ESG and what you can do, and there's different means of doing it. But are we maybe thinking of maybe ESG too much as a portfolio management option rather than a means to create environmental, social, and also governmental change that can be a permanent difference for the future?
So your question is, are we thinking of ESG more as a portfolio option rather than a means to create change? Is that the question?
Yeah.
Okay.
So from an investor, so what we're trying to do from an investment perspective is marry up or align the investors' financial objectives with their ambitions around sustainability or ESG, and in this case, biodiversity. And so we've got to bring these together somehow. And so in trying to meet both of those, there is almost two kind of separate things at play here. The regulator, and I spoke to the regulator a few years ago on this, and as long as the financial objectives are being met, you can kind of do what you want after that. So, there's a kind of onus in getting those financial objectives correct first. And if you're a pension scheme, you've got to pay people pensions at the end of the day. So, you have to think about that probably, and there's a bit of primacy going on here. That said, and it links back to the double materiality point, if you're going to try and look for your investments within an ESG, you mentioned ESG broadly, or biodiversity. When we're looking at these, we're still looking at them through ultimately through a lens that will generate the appropriate returns. That's still important. But equally, what it will do to your portfolio, and indeed what your portfolio will do to the outside world. The way we tackle that for the latter is largely around various arrangements like TNFD and TCFD, so governance, risk, metrics, targets, etc. I think, if I'm being blunt, you can get lost in all of that and not achieve anything, right? So we still have to, and I think biodiversity in nature is going to be really vulnerable to this in a way that other areas aren't quite at the moment. So with climate, we've got metrics that we are hard and fast, and we kind of target them. But in nature, I think we've got some real challenges to, get to the metrics that everybody's comfortable about, so that we can evidence changes in behaviours and impact. And we're not quite there yet, right? So, but I think once we go through this process with TNFD, people will be more literate, we'll have a better understanding, we'll be reporting on it. And just as climate now goes on to what are the investment solutions to make things move, we'll then go through that process with nature and biodiversity. So, yeah, it's a bit of a round argument, but it's a difficult one to sort of pin one thing on.
Sure. Bruno.
So I agree.
You looked enthusiastic, Bruno. So
that's me looking enthusiastic. So I agree with that, and I think we as an asset owner and an institutional investor are of course bound by fiduciary duty. So that means we can't, even if we wanted to, go off and invest purely for impact other than bottom line, because we aren't allowed to do that. Our regulator won't allow us to do that. What's really crucial, though, I think 2 points to make. One is that we really do see huge overlap between delivering long-term financial value to our customers and delivering the right outcomes more broadly for sustainability, whether that's nature, whether that's climate change, whether that's social outcomes. And the other I think important point to make is that the way that we go about that, partly because it's how we think we deliver best returns to our customers, and partly because we think it's the right thing to do, is very, very much focused on delivering real-world change. So what we don't do is look to decarbonise, just to take climate change as the slightly easier example to illustrate the point. We don't do a paper decarbonisation exercise of our portfolio in order to tick those boxes. We don't think that would be in our customers' best financial interest, and it definitely wouldn't be delivering real-world change.
I'm going to ask a question, but I'm coming back again. Okay, so keep those questions coming. Good. We've got one over here now, Angus, if you want to make your way all the way around here. But while you do, here's a question. Earlier today, the wonderful Casey Rayner talked about the creative force of capital, which is exciting, right? Here's my question. You know it's coming, although I gave you about 2 minutes to think about it before we started this panel. Do you trust the creative force of capital with the challenge of addressing nature and biodiversity and actually solving that crisis? If you do, why? If you don't, why not? And what would have to change? Sonya, you looked most enthusiastic.
I was just thinking that would be a good university question. You should give that to your students. Look, I think the private sector and the financial sector has a large potential role to play. I think from the biodiversity discussion, it has been quite absent so far, and we can see that within the sort of how this has played out in international negotiations. Everyone was excited about COP15. The financial sector was suddenly there. The private sector was really well represented. We played a really large part in negotiating on behalf of the finance sector. But, that wasn't the first time we had an international agreement on nature. We had the Aichi targets from 2010 to 2020, and barely anybody knew about them in the private sector. They were largely missed by governments around the world. And I think that shift of getting more interest from the private sector is really exciting, and there is potential there. Maybe I'm just saying this because I still want my job, and I want I want to be in this space, and I think there is a lot that we can do. Of course, there are risks. We've got to do it with integrity. We've got to do it carefully, and we've got to be genuine about what we're doing. But I think, given the fact that businesses fundamentally rely on the goods and services from nature, I mean, this fact of 50% of global GDP is moderately or highly dependent on nature, you could argue it's much higher. You know,
100%.
would we all come to work if we didn't have food and water and clean air? And that is everything that our businesses have been depending on, but just not taking into account. So we have to do it, I think, and we've got to do it properly, hopefully.
Bruno, do you trust the financial services industry with nature?
I think the financial services industry has a crucial role to play. I think this is all about partnership, though. I mean, I'm a firm believer in public-private partnership, and, you know, I've based my career on that, really, in one way or another. And I think that's where we're seeing results, and they're slow to get to, and it's hard graft to get to them. But I think when you bring public and private together and work collaboratively, that's where you get the best out of that creativity, that capitalist creativity. If you just leave it to go to plough its own furrow, I think there's, you know, maybe they'll do brilliantly, but there's, I think, much greater risk that it will go wrong.
Brian?
Yes.
Good. Do you want to expand?
I will. With the caveat that the financial services sector isn't the police of what gets done in nature and biodiversity. And by that I mean, whilst we have some levers and pulleys to make things happen, we're not the ones in control here. But I can, for example, my answer is yes, because I can, for example, see, particularly in the debt markets, where companies are trying to borrow money to grow, diversify, whatever they invest, whatever their plans are. Those who lend them the money have some strength over what they on the grounds of why they lend them the money in the first place, and therefore there is some leverage there. I think more so than on the equity side. And so I think we do have a role to play here, and a role where we can have quite big influence. But to get back to Bruno's point, it's not just us. You know, there's an agricultural industry, there's a pharmaceutical industry sector. There are all these other sectors, that kind of have to come together and collaborate. And I hate saying things like that in events like this, because it just sounds like we've all got to come together and collaborate. But if you do think about it, you know, I could articulate our role. I'd expect pharma to be able to articulate their role, because they're one of the culprits in a lot of this. And
also one of the people providing solutions, if I may just stand up for the farmers.
Correct. Yeah, it's a bit like saying the energy companies have got big solutions in climate. I get all that. But I think there has to be some kind of knocking our heads together, that's probably a better way of putting it, to get to a more holistic type solution, because we will focus on one or two things that we've got at our disposal to make a difference.
We had a question here. Yes, and then in front, one row in front after that, Angus.
Oh yeah, it was a quick question for Bruno, and that with DEFRA in the room, I just wondered if there were any, sort of from your experience of the TNFD pilot, are there any disclosures that you now think are an absolute no-brainer that we should include in the SDR regime? And again, on the basis of that pilot, is there anything else that you think is kind of a valuable insight that you would share with the room?
We're, I would say, still going through the process of deciding or determining what we think the conclusions of the pilot are in terms of where we go next. So there's a call out at the moment for early adopters of TNFD, and they'll be announced, the first tranche of early adopters will be announced in mid-January. The expectation is that those early adopters will not disclose on all of the different bases, and they'll pick, you know, potentially just one. We haven't finished that process yet, so I don't think I've got any sort of nuggets to share with you, other than to say there's absolutely no chance that we would be able, or anybody, I think, to disclose across the board, you know, robustly on TNFD. So it being an early adopter, I think, is a really important step on that journey to developing TNFD to the point where we will be able to make robust disclosures across the board. But, you know, and it's a theme that I've heard a number of times today. You know, we mustn't let the great be the enemy of the good. We've got to sort of go on that journey, and by going on that journey, we'll ultimately improve things.
My favourite quote from Christiana Figueres, which is momentum, not perfection. There was a question just in front, black and white dress. Thank you for women for wearing so many colours. It's so much easier to identify you.
Don't think black and white is the
Well,
best choice.
it's different.
So Brian actually answered my question, so I've pivoted slightly. So the original question was, who's ultimately responsible for the source of funds that come to you with your customers, and saying actually if it's the result of damaging activity, should we invest that money? But to pivot on that, what would be your kind of request expectation from other actors in the ecosystem to protect you and your investment strategies from having those funds coming to you if they are the result of other damaging activities? And I'm not talking about illegal, because that's an easier line to draw. If it's an illegal activity, that's a different story. But if it's something that's damaging and a bit more nuanced, how do you protect yourselves and your other customers from, being part of that same pool?
Yeah, that's a good question. And I had some notes on this, but I've just realised it says top 10 saxophone songs at the top. So I've got the wrong list.
We could ask that question.
Sorry. So So what? It's good. How do we protect our customers? Really, is what you're saying from certain activities, and what due diligence is undertaken. So, that's largely the role of people like Bruno, who look after assets and manage assets on behalf of the clients to do their due diligence. But we have a role as well. So I can maybe explain what we do on the climate side, and then I'll explain why I think that will happen in the biodiversity side. So on the climate side, we look at stocks from the grey to the green. We look at them across all portfolios. We look at them across all sectors, and we slice and dice in every which way we can. And if we're trying to follow a decarbonation curve, I can identify the stocks that are throwing up red flags and have got problems, and I can address it. I think we'll end up with something similar in biodiversity and nature, where we will look across all the stocks that Sonya and Bruno have got in the mix. We'll look right down into the detail and look at the red flags. One of the things we did with TNFD is we're on the TNFD forum, and they asked us to take one of our funds and do the LEAP analysis on it. And I'm sure you all know what the LEAP is, but it's just a way of assessing biodiversity. And from that, we could get to that information about those that are doing bad things to soil, those that are, putting waste out from their operations, etc. And I think that data at that level will be there to interrogate. And so I think, and the reason why we've been interrogating it is because we want to see progression. It's not just a case of we want to look at this stuff, we want to see it moving, reducing. It's all about the action, right? Or as the US philosopher Elvis Aaron Presley said, a little less conversation, a little more action, please. And I think that's what we're looking for here. We want to see progression through time, that people are trying to hit their targets. And so if we find out there are assets in there that are not meeting that trajectory, we'll call it out.
So I'd like to go with some quick fire questions to get some energy, and this will be our last part of this session. So I've got 3 quick fire questions. We're going to start with Bruno. Really quick answer, Bruno. I've told you this upstairs, you have to remember. Okay. What's your view on TNFD?
Good first step, moving in the right direction, lots more to do.
Sonya.
TNFD is great, it will help, but it's not the end goal. We've got to use it to make better decisions and actually work to protect and restore biodiversity. So similar, it's a first step.
Brian?
Yeah, I was going to give my personal view, but I'll give you the company
You can
view.
give a personal view if you want.
No, I think...
Not a saxophone solo, though.
No. I think it will result in decision useful information for management. But my personal view is there's a shitfest of data problems coming our way.
Would you like to repeat that, or is that...
No,
that's okay,
fine.
Okay, quick fire question 2. Starting this end this time. Brian, are you optimistic or pessimistic about financial services' contribution to the nature crisis?
I'm optimistic. I've just dispatched one of my team with wellies and midgie cream down to a forest in the New Galloway Hills to try and work out what we need to do with forestry, and I'm really supportive of what we can do in this space. So I'm pretty optimistic.
Good. Sonya, optimistic or pessimistic?
Also optimistic, but I think we've got to use all of the tools in our toolkits. Investment, of course, both public markets, private markets, stewardship is going to be absolutely key. And then things like voting, shareholder resolutions. We've got a lot of tools at our disposal and we need to use them on this topic as well.
Bruno, optimistic or pessimistic?
Also optimistic, and I think just to refer back to a couple of themes from previous questions, one is it's not financial services alone, it's absolutely, we are a big part of the solution, but we need to work collaboratively, and the other is we're on a journey.
If I could just, we've got one more quickfire question, but I just want to put out there, as an academic, I have to point out that we have a confirmation bias issue here, or a bias issue. We're in this room because we care about this stuff. There are a ton of people in financial services who are not in this room. So while we're all optimistic, and I agree, it doesn't mean it's going to be smooth sailing because of the people not in the room. But my final question, sort of linked to that a little bit really, is does motivation matter? So if it's for finance, wanting to make money, but they put it into nature, fine. But if it's for finance wanting to fix nature, does it matter whether they're doing it for money or for nature? Sonya, I'm going with you first.
I think whatever the motivation, it has to be done with a lot of care and integrity. And I think if the motivation is just financial, it could be quite difficult and things could get lost on the biodiversity side. So whatever the motivation, we've got to do it properly.
Thank you. Brian?
Yeah, I think it's interesting what motivates people in investment space. And we did some work a few years ago looking at behavioural finance and why people go to social impact investment, what draws them there. And to cut a long story short, it's because they have some kind of belief or motivation is the word. They feel aligned to it as a subject. And the same applies here. I think you'll get a lot of action with private wealth initially. Motivation from an institutional perspective, I think it's going to be a bit more stick than carrot, and I think it'll be regulatory driven.
Bruno, does motivation matter?
I think that's the most philosophical of your three questions and the hardest to answer pithily, so I'm minded to list my top 10 saxophone solos instead. But I think ultimately, if you deliver the right outcomes, I don't think motivation matters, but I think we're most likely to see nearer term action if that motivation to deliver a profit is married with a broader sort of purpose-led motivation.
Well, can I first encourage everyone to discuss that question tonight at the castle or amongst colleagues at work? Does motivation matter in relation to this? Please join me in thanking the panel for a very engaging discussion. Thank you so much.